Speaking of the IMF and World Bank also kicking off their spring meetings this morning, the World Bank expecting global growth to weaken this year. Joining us now for an exclusive interview, David Malpass, World Bank president. Welcome back, President Malpass. It's good to see you.
Hi, Sarah. Good to be here.
You actually upgraded the forecast for global growth this morning, which is kind of a surprise given everything we've seen with interest rate hikes and the banking failures in the U.S. Why are you feeling a little better?
No, growth is slowing down from last year, which wasn't a great year. The reason it's an upgrade right now is our previous forecast was in January. So some things have improved since January. Specifically, China lifted its lockdown, so that's been helpful. And there's been a little bit more buoyancy in the advanced economies, the U.S. and Europe, on the consumption side. But from the standpoint of the trend lines, they're still toward weakness. And so we're seeing the slowdown from last year, from 2022, where there was 3.1% growth. We're now slowing to 2% growth in 2023. And that's particularly apparent for the developing countries, the weaker countries. So it's still a grim outlook for developing countries. That includes the higher oil price. Maybe today oil is down a little bit, but it's up from where it was, and it's still running at $80 a barrel, and you see that in the natural gas prices. So these are all really important to developing countries because they use it to make fertilizer, to run the farm equipment, and to produce crops.
A lot there that we can ask you about, but I wanted to start with China because we just had this report from Eunice Yoon in Beijing about the hostilities and the tensions ramping up, China and Taiwan, China and the U.S. And then at the same time, we're looking ahead to this China reopening as a positive contributor to global growth. Do you think investors have this right? It feels tenuous.
One of the things we can look at is it matters more what happens in the U.S. and the advanced economies. They can be stronger, and that would create more balance in the world. As far as the investors, I think they're looking at the real world of China being the second largest economy and growing faster than the U.S. And so that creates some of the imbalance that people are feeling. As we look at it, China's taking in a lot of private sector investment this year. So I think the response of the world should be to redouble their own efforts to get small business growth, to get the economy up and running, to get more production of the things that the world needs. And that would reduce the tension somewhat.